everyone. Good morning. Thank you again one more time for joining us here in Facebook Live and as well here. Today, Avance is bringing a presentation in regards to the steps to buy a house and what to do and what not to do. So as you all know, Avance focuses and give information to the community. So we bring different topics. Every 2 months we bring together a seminar and we bring professionals from different industries. Like we had one about investments, finances, and then really soon we're gonna have one about immigration, in which we're gonna bring an immigration lawyer. And today we have one about the do's and don'ts about purchasing a home, and we have a professional with us today, which is Ricardo, one of the founders of Avance Progreso Hispano as well. He works with San Diego Funding and has a lot of information to give us today. But I also want to give special thanks to Gente Bonita for letting us use their space for the seminars. And also, guys, if you have any questions, please ask questions here on the Facebook Live. We'll have someone answering those questions. And now I'm going to leave you in great hands with Ricardo Nava, here that he's going to present more information about the do's and don'ts of purchasing a house.
All right, hello everyone. My name is Ricardo Nava, and welcome back to Facebook Live. We are getting the presentation brought up right here in a couple minutes, but before we do that, just to tell you a little bit about myself. I do work for a company that is a mortgage banker. So for those of you who are watching and have no idea what that is, basically the way it works is we have different investors that we work with, such as the big banks like Chase, Wells Fargo, US Bank, and all those. And when you apply for a house, instead of shopping around to each different bank, what you do is you go to us, fill out the application, and we shop those banks for you to find you the best interest rate, the best loan program, and all that. So for those of you watching the video, I'm gonna guess that, and those of you here, I'm guessing that you either are thinking about buying a home or have already bought one and want to know how to do it right the next time, or you're curious about some do's and don'ts of buying a home and what it basically common mistakes that people make. So what I'm going to do today is I'm going to cover briefly a couple of common mistakes that people make and what to do to avoid those mistakes. Now at the end, if you want to go further, deeper, we can definitely talk afterwards. If you're watching this, you're more than welcome to post your questions and we can answer them live as well. For those of you that are watching the recording afterwards, you can send us a direct message or contact us through social media. For those of you that are here, we're going to have a question and answer afterwards, or your notes on your clipboards have a section at the bottom where you can leave a question as well and we can answer it later on down the road. Okay? So I already shared a little bit about myself. I'm also a military veteran. I work a lot with VA clients as well. And I was born and raised in San Diego, and that's a picture of my family right there. It's my wife and my son Roman. He's 2 years old right now. So the first thing that we want to go into is, the first do would be to get a pre-approval first. Okay, what you don't want to do is you don't want to start looking at homes first. And the reason why this is important is because a lot of people like to do this the opposite way. And I completely understand. You're excited about buying a home. You really want to start looking what's out there. Nowadays, the way technology is Zillow and Redfin and all those apps, they make it so easy for you to just hop online and see what's out there. But what's going to happen is you're going to see these homes. In your mind, you're going to think, I think I can probably afford around $500,000. So you start looking at those homes. And what ends up happening is you fall in love with one. Maybe you even contact an agent to start looking at the homes. And then you fall in love. And then what does the agent say? Are you pre-approved? Oh, no, we haven't done that yet. Okay, well, you're going to want to do that first. They're going to tell you that. So then you go and you get your pre-approval and you find out that you only qualify for $450,000. So now you started off your home search with a heartbreak because you fell in love with this house that now you can't necessarily afford. Or maybe you can afford it. Maybe you are pre-approved for $550,000 and the home is $500,000, but you had no idea what the payment would look like. And now that you know what the payment looks like, now you're thinking, I don't want to pay that much. So now you have to start the search all over again. So always get the pre-approval first. Find out how much you qualify for, but the most important thing is how much do you want to pay per month? Because it doesn't matter if you're qualified for $1 million. If you don't want to pay more than $3,000 or more than $2,000 a month, whatever the number is, that's going to cap you at what you can get. So it's very, very, very important to talk to someone like myself first, so we can get all that figured out for you. And then afterwards, then we put you in contact with an agent, and then you go with them saying, this is what I'm pre-approved for, this is what I'm looking for, because this is what I want my payment to be. Cool? All right. So the next one is, what you do want to do is you do want to get informed about all the loan programs that are available to you, okay? What you don't want to do is you don't want to have a closed mind when it comes to figuring out the best option. Now, the reason why I put this here is because I'll come across people who will say, oh, well, my uncle, he tells me I have to get a conventional loan. No matter what, don't go other than conventional. Well, for those of you who don't know, a conventional is your standard normal loan that most people who put 20% down are going to get, right? Because if you're putting 20% down, let's say your uncle put 20% down, it doesn't make sense for him to do anything else other than the conventional loan, right? But he doesn't know your situation. So he's recommending something based off of his situation. Your situation is different. You might only be putting 3% down, which is the minimum down payment, all right? And if you're going to do that, maybe an FHA loan works out better for you. But if your family members in your ear saying, don't get anything other than conventional, and I'm saying FHA I think will work a lot better for you, now there's conflict and you don't know what to do. Do I listen to the expert or do I listen to my family member? Just so you know, the FHA loan is specifically designed for first-time home buyers. Why? Because it gives you generally a lower interest rate than a conventional loan, a lower down payment, it's 3.5% for an FHA loan. It allows for a lower credit score, and it allows for a higher debt-to-income ratio. So if you're not familiar with the term debt-to-income ratio, it's basically how much money you make per month versus how much debt you have. The debt includes your new mortgage payment. For a conventional loan, that can't be more than around half of what you make. But for an FHA loan, they'll let you go up to 55%. So it allows you to qualify for more that you normally wouldn't qualify for with the conventional loan. So just go in with an open mind. Be open to whatever the expert, whether it's myself or somebody else, is telling you. Okay? The next one. What you do want to do is you do want to ask questions. Okay? What you don't want to do is you don't want to be afraid to speak up. And the reason why I say this is because a lot of times what will happen is, especially being new to the process, you're afraid to ask certain questions because maybe you might think that it's a dumb question, or you don't want to look completely ignorant when you're asking, oh, well, what about this? Because you think in your head, this should be something obvious that I should know about, so I'm not even going to bring it up. Okay? What I'm here to tell you is that our job is to help you get informed completely. Even if the question seems something that's so obvious that you should already know, never feel bad about asking what's on your mind. Because if you don't ask, how are we going to know what to tell you? And how are we going to be able to help you and serve you the best if you're not asking those questions? Another thing that you do want to do, okay? What you do want to do is start working on your credit now. What you don't want to do is you don't want to assume that your credit is fine. Let's say that you're not planning on buying for another year, whether it's your first one, your second one, your third one, your fourth one. Let's say you have a long time before you're planning on buying, and you think, whatever, my credit's probably fine, and wait until you're actually ready to pull your credit. Because you would be surprised as to how many times I come across people that think their credit is fine, but because they never check it, when it comes time to pull credit, certain things will pop up, okay? Certain collections that you didn't know were there, debts that you didn't know were there, things that you thought you paid off, but for some reason the credit reporting company never reported it. That happens all the time. I've come across people that get their credit pulled and a judgment shows up against them on their credit report. And they have absolutely no idea where that came from. I had a guy, had no idea why this judgment, just so you know, the only way a judgment can show up on your credit report is if you go to court or you don't go to court, someone files a lawsuit against you, and you owe money, the court determines that you owe money to this person, then they can actually file a lien against you and it'll show up on your credit report. This person had no idea it was ever there until we pulled credit. It took us about 2 months to figure everything out, or for him to figure everything out, and me helping him along the way. But he finally figured out where it came from, figured out it wasn't his. It was something to do with the family member who like used his name or something like that. And he got it taken off, but it took a while. He was ready to buy right then and there, but he had to wait several months to get all that taken care of. That's why I say get your credit checked now. The worst thing that can happen if we do a hard pull for you is you get docked a couple of points. Well, guess what? If you're not going to buy for another year anyway, you'll easily make up those points because I can give you tips on how to improve your credit from here until that point. So you really lose nothing by getting it checked. If you're really, really, really adamant about, I don't want to get a hard pull, almost every single credit card company or bank out there now offers a way to check your credit doing what's called a soft pull. I know I have Capital One, and on my Capital One app is right here, check your credit score. And you can check your score. It only shows your score from one bureau, not all three, but at least you get a gauge. So if you look on there and you see that your credit's at like a 600 and you thought it was at 700, then something might be wrong. So then it might be worth getting a hard pull to figure out what's wrong. Because another thing that I come across is I've had people who, they have money, they got great jobs, they make their payments on time, they have no collections, no debts. They're like, yeah, my score is 850. We go and pull it, and they're at 685. And they're like, why in the world would my credit be so low? Well, people don't realize that if you're someone who pays your credit cards off every single month to zero, every single month, and you don't have any sort of credit reporting, your score is not going to be high. Because the only way that the bureaus know how to give you a credit rating is how well do you use your credit. So if you have no car loans because they're all paid off, you pay off your credit cards every month, you don't have a mortgage on there yet, you don't have anything on your credit, what's going to happen? Every month, it only gets reported once a month. Okay, the bureaus, Equifax, TransUnion, and Experian only get reported once a month. So if when it gets reported, it's always zero active credit, they're going to think you're not using credit. So how do I know how good you are with your credit? They're going to give you a lower ranking because you're not really using it. So what I would recommend is don't pay off your credit card zero, leave a little bit of a balance on there. Let $100 get reported. That's not going to hurt you. Even if it's a high interest credit card, 19% off of $100 is not that much. You know what I mean? So let it get reported, make your payments, your minimum payments, don't pay down to zero, and the bureaus will see that A, you're making your payments on time, you are using your credit card, and you're really well at handling your credit. That will shoot you up from a 680 to an 800 in no time. So things like that are things that people don't realize. So that's why I say don't ever assume that your credit is fine. Because even if you're like, oh, I'm probably at a 700, I'm fine. If you're at a 699, that gives you a lower interest rate than if you were at 700. 1 point. 1 point. So if you're like, I'm ready to buy now, we pull 699, you find a house, you're in escrow, you could have saved a lot of money by that 1 point if you would have known ahead of time, and I could have ran a credit simulator and said, hey, if you just pay $50 on this card, you'll jump up like 5 points. But it takes about a month for that to kick into effect. That's why I say you gotta plan ahead. You gotta plan ahead. Don't wait till the last minute. So basically what you want to do is you want to have a plan. Okay? Don't wait until the last minute to start figuring out everything. And that's not just with your credit. That's with everything. Because let's say you have a dream of, okay, I want a $400,000 single family home. I don't want a condo. Let's say that's you, right? Well, how are you going to know what it's going to require to get that house if you don't make a plan? If you sit down with me or whoever it might be and say, I'm ready to buy, this is what I want. Once I look at your whole situation, you might actually be 6 months to a year away from actually getting what you want. But if you would have planned 6 months to a year in advance, I could have put you in a plan. And I do that all the time. And what I do for people is I will sit you down and say, what are your goals? What do you want to achieve? Based off of that, we will make a plan. The plan could be, great, you're ready to go. Go talk to your agent and start looking at homes right now. Or it could be, you know what, I think you should pay this, and this off. I think you should have this amount of money, work on your credit with this. We can map out a plan so that you know exactly what you need to do. And now you know, okay, my target is 4 months. And now I have a checklist of exactly what I need to know. You're not going in blind. Hope that makes sense. That's basically it for what I wanted to talk about today. And just to recap, make a plan is so important. Start working on your credit. Don't just listen to a friend or family member who's making recommendations, because they're not the expert. They're just talking to you based off of their experience, and everybody's experience is completely different. And your home buying experience is going to be different than the person next to you, than your parents, and everybody else. So listen to us, who are the experts. Our job is to help you to get into the home that you want to get, to help you achieve your dreams. Okay? So next up, what we have is, we actually have a guest. I mentioned him earlier. His name is Angel Vallejo with Big Block Realty. He's been a realtor for a while, and he's going to come in and share from his perspective a couple of tips for you guys as well that can help you along the process. So Angel, come up here, please.
All right, thank you, Ricky. I'll be remiss if I wouldn't say some kind words about this gentleman right here. He definitely knows what he's talking about. Thank you for everything that you're doing in the community, and let's give Ricky a round of applause. Awesome. Okay, so I'm really excited to be here. Thank you for showing up. I know it takes a lot for someone to come out, wake up in the morning, get dressed, and go to an event to hear about a home buying seminar, right? Well, I did the same thing, and my wife is at home with my baby boy Ezekiel. That's my wife Dion there, and little Zeke. And I'm here, and I woke up and I got dressed because I believe that the American dream is live and well, and I believe that you do too, because you showed up. So give yourself a round of applause for that. Thank you. And so just a little bit, I'm not here to talk about myself. I mean, really, I'm here to just pour into you today. And there's a lot of information that's out there on the internet, and there's people that have experiences that are going to share their things. And I'm just going to share a few things. I know there's a lot more out there, but hopefully these few minutes that I'm here with you, that you'll be able to get some value from it. I'm from San Diego, born and raised. I have one older brother and 2 younger sisters. When I was born, my older brother, my parents asked him what they should name me. And my brother, all excited, King Kong. Let's name him King Kong. Imagine that. My name would have been King Kong Vallejo instead of Angel Vallejo. Luckily, that wasn't the case. They did name me Angel, and this is a little joke that we have in our family. But yeah, so I have 2 younger sisters. After high school, I was born and raised here in San Diego. After high school, I wanted to get out and explore, so I joined the military. I did 4.5 years active and 3 years as a reservist. And so awesome. I applaud you. Actually, today's a military appreciation day, I heard. But anyways, so awesome for you veterans out there. I do speak Spanish. I'm bilingual. It's my first language. I lean more towards English, but I do have a lot of my clients are Spanish speakers, and I'm a family man. I'm all about family now, and I also serve in. I do a lot of ministry type of work, so I serve in ministry, and so enough about me. So I want you to imagine right now, one of the greatest gifts that we've been given is the ability to imagine. So each and every one is here, and you online, I want you to imagine that you are a homeowner. You are a homeowner. I mentioned earlier that the dream is alive and well. The American dream is alive and well. There is an opportunity, a piece of of you becoming a homeowner, and it's possible. And I'm just here to just share with you that it is possible. Okay, so I'm just going to share a few tips. And let's see here. Where are we pointing at?
Going down.
There.
Okay. All right, so I want you to imagine that it is possible, okay? And the first thing that I want to share is that you want to be clear on what you want. So who in this room right now knows exactly what type of home they want? Anyone? All right, mention to me maybe one thing that you know your home has to have. What is it?
It has to be in Bernardino Trails.
Okay, so it has to be in Bernardino Trails, specific. Okay,
Yeah.
Awesome. Anyone else?
Has to have at least 5 bedrooms.
It has to have at least 5 bedrooms.
Yeah.
Okay. Any other?
A large backyard.
A large backyard. Okay.
Swimming pool.
A swimming pool, right? And so knowing these things, being clear on what you want. And then you go out there and you start looking, and as soon as you see it, you're like, man, this is it. This is the house that I want. So the first tip that I'm giving is you want to be clear on what you want. What neighborhood is it going to be in? How many bedrooms do I want? The kitchen, do I want an open floor plan or do I want it closed in? You know, do I want a chandelier? Do I want a view to the ocean, or do I want a view to the to maybe mountain view? So be clear on what you want. That's the first tip. And one thing that we do when we sit down with our clients is we take people through a process of really dreaming up their home, their what's your dream house? Really, let's talk about it. Let's turn that dream machine on and let's see if everything were to fall into place, what would you want? And we go through this process, and I have a PDF, so for you online or even here, I could provide that for you, and you can go through that, you know, asking these specific questions on what exactly do you want to get crystal clear with that. So that's the first one. The second one is understand that it's a process. It is a process, and there is predictable steps that we take throughout this process. And so how many of you, if I mentioned there was $1 million tomorrow morning, 6 a.m., how many would show up at there? If someone was to promise you $1 million, 6 a.m. in the morning, right?
Yeah.
Okay, so how many of you would agree that knowing the address, all right, you'll be there. Regardless, you'll probably clean out your schedule, like I'm there, right?
Yeah.
Okay, so knowing the address is going to be important, right? And you get the address, but then you've never been there before. So how many of you think that by having a map or a GPS would be important to getting there? Anyone?
Yeah.
Right? We all know that just having that, right? So having a plan and knowing that there's a process to get there is it's possible. Okay, so make sure that you have. We also have a handout for that of the process of how the process is. It reminds me of when I was in the military. I had to go to boot camp. You guys probably all heard of boot camp, right?
Yes.
And I went through there, and I had no idea what the next step was going to be, and I was so stressed out. And I remember seeing a guy. We were out there. We were running an obstacle course, and in his pocket, he had the whole 6 weeks planned out and everything. And I'm like, man, how did this guy get this guy? Like, how did he know? I still, to this day, I don't know how he got it, but he knew exactly what was happening next. And I was like, man, I wish I would have had that while I was going through it. So same thing when buying a home. I know that it could be stressful, so it's good to know that it is a process, and then there's certain things that have to happen throughout that process. Okay, cool. And then there's steps too. So obviously you could get with Ricardo, or send us a text or email or whatnot, and we could get that document to you. All right, so let's see. What's the third one is don't rely on other people's experiences. And so being flexible. Let's see, did I go ahead of myself here?
There.
Okay, yeah. All right, so no, go. Can you do one back? All right, so it's 2 slides. All right, so don't rely on other people's experiences. Ricky touched on this shortly, and just knowing that it's being flexible is going to be more enjoyable. And there's usually sometimes you're gonna go out there and you're gonna hear people's stories, and people are gonna share with you about their experience. This might have been last week. This might have been 10 years ago, 5 years ago, 20 years ago. There's certain things that happen in real estate that are all, that are pretty predictable, but there's also other things that times change. So if someone found their house in a newspaper ad, doesn't mean that that's the way that you're gonna find it. And so the just knowing that it's being flexible. So I had a client who wanted to, they wanted to know, like, all right, are we gonna close on the 1st or are we gonna close on the 15th? We have to, they wanted to schedule everything because they're working during that time. So it's normal that you want to have, like, know exactly when is it going to close, so you could maybe take a day off to help move everything in and stuff like that. And another thing is, where I'm just mentioning that you want to be flexible with the process. Ricky also mentioned that you might fall in love with a house. And I don't know how many times I've gone out there, even myself, and I found a home and I'm like, this is it. This is the one. Submit offers, and then what happens? I don't get it. And it happens all the times with other clients too. So just being flexible, you're probably going to fall in love more than once. Know that. And there's certain things that you can do is, like, once you find the place, in this atmosphere, in this climate right now, it's good to, if you know that's what you want, you're crystal clear with it, go ahead and submit an offer. And there's ways to get in there as well. All right, so next slide, please. Okay. All right, so I went over the don't let somebody else's experience stop you from having a great experience. There's a lot of different transactions being done out there, and they're all different. Everything is different. So you want to make sure that you're flexible, and yes, it can be an enjoyable process. It doesn't have to be like all drawn out, like paperwork and all that. You can really enjoy the process. Okay, my next one is opportunities are everywhere. So in this room, I'm sure there's different ways that we've searched for properties. What are some ways that we're out there searching for properties? Online, right? Online is really big right now. Where else? Open houses, yeah. Open houses. Any other ways? Yeah, so mainly right now, really big is online open houses, going out there, finding a neighborhood and going and looking around, and you might see a sign or something, and that's how you find out. So just knowing that the opportunities are out there. There's plenty of opportunities. You can go online, you could get on the newspaper, you could go to open houses. Just know, but there's people out there that are going to say, man, there's not enough inventory out there. You're not going to find a house because there's no inventory. Who knows if that's true or not? Because I know that when I go online, I see all kinds of houses. So knowing that what you want and where you want to get it at is going to be really important. Because and don't believe that it's a low inventory market. Because it maybe in one area, maybe in one little area, but there's tons of properties out there. There's a lot of properties that are available, and it's just knowing what you want to get there. So, okay. So another thing I want to mention in regards to that is, with our organization, we find properties that are off market too. So just because there's stuff that is not showing online doesn't mean that it's not available. There's also for sale by owners. That's another way to get access to homes. So we have lists that come out for before they come out on market, and also for sale by owners lists. So we could also provide that for you. And my last point here is whenever you're in doubt, so doubt's gonna happen. It's gonna come up. You're probably gonna go out there. You're gonna get pre-approved. You start looking for some houses. You might put in an offer. It doesn't happen, and there might be some doubt that kicks in. It's normal. It just happens. It's part of being human. Just know that you could always reach out to a professional. I'm not up here claiming that I know everything, because I know I don't, and I've been in the industry for over 10 years now. I still pick up the phone and call people like Ricardo or other people in the industry, and I ask questions. So it's okay to ask questions, and ask professionals. We don't know it all, but there is a wisdom in a multitude of counsel, so it's good to reach out to people. And let's see here. Okay, so that's pretty much it. We have a question here.
Yeah, I have a question.
Yes.
So, I know that nowadays it's more everyone goes online to look for places, look for
Absolutely.
where do you want. So, what do you guys recommend? To look out for a realtor first, and you guys have more access than what we can see in Zillow and all these pages when it comes to a property, or it's just like look for a place online and then go to a realtor and be like, can you help me with this, or how does that?
Yeah, so we would recommend, it's a combination of both, right?
Okay.
So when you're out there looking, you want to know how much you qualify for.
Yeah.
And once you know that, then obviously I'm going to recommend going with a realtor.
Okay.
Because we know there's websites out there that are promoting a lot of different houses that are on the market. And the challenge is, so some of those websites are not updating it. So it might show that this is active, this is ready, but it was off the market like weeks ago, but they didn't update it. So I don't want to mention any websites that do that kind of stuff. But I do know that Realtor.com is a good source, and you know that if it says that it's active, it is active, and if it's pending, that means it's already in contract. If it's contingent, that also means that it's already in escrow. So you just making sure that you're getting a professional advice once you do find the property, and that's why having someone there to help you in the process is really important.
Okay.
And what I want to add to that too is, so the first thing you want to do is obviously meet with someone like Angel, right? So you're going to sit down, you're going to have your initial consultation and do all that stuff. So once you already have that relationship established, then what I would recommend doing is when you go online, okay, and you see houses that you like, always send them to him and say, hey, I like this one. Because Angel's right. A lot of the big websites that are out there, they purposely leave homes that are already in contract up still for sale, because a lot of those websites, they sell leads to people. So when you click and enter your information, that gets sold to somebody else and say, hey, call this person because you're looking for a house. So instead of doing all that, instead of going online and clicking and entering all the information, if you see a house you like, shoot the address over to to Angel, and he'll look it up and tell you, you know what, this one's already gone, or yeah, it's for sale, let's schedule a time to go look at it. But always schedule everything through your agent, and don't go online and start, because there's like schedule appointment now. Like, I would recommend not doing it that way. Just take the address and schedule the appointment with your agent.
Okay. Thank you.
All right. Any other questions?
So ultimately, I know you guys both talked about credit, right, and how important that is when you're making an application. So do you think that, or do you find that most homeowners are solely based on your credit, that's how they accept you?
As far as getting an offer accepted?
Right.
No, I would say it's kind of half and half, and the reason why I say that is because usually when I pre-approve you, or when anybody pre-approves you, what you get is you get a pre-approval letter, and it says you're approved for this much, with this much down payment from this company and this person, right? It doesn't have your credit score on there. So when Angel submits the offer to the listing agent, the seller, they can't see what your credit score is. They have no idea. They trust that I did my due diligence and made sure that you are fine and, you know, all around before they accept the offer. Now, there are certain times when the listing agent or the seller will request what is called a cross approval. A cross approval says, okay, I see that you're pre-approved by let's say me. Let's say I pre-approved you. Okay? The agent might say, okay, that's great, but I want that person to get cross approved with this other lender to kind of double check my work, basically. So what'll happen then is the other cross approval lender will reach out to me and say, let me see her credit scores, let me see her proof of funds, let me see her this and this and this and this and that. So they'll double check everything. So at that point, yes, they will see your score. So if you're at the very, very, very bare minimum to qualify, they would see that, and their job is to report to the agent and say, well, everything looks okay, but you know, her scores are at the very bare minimum. You know what I mean? So that could affect you that way, but that doesn't always happen. But that's why I said make a plan. You know, because if you plan ahead for your credit, we won't have to worry about that. Because sometimes it takes very easy things to fix your credit. If you're at a 620, which is a minimum for a conventional loan, you could get it up, you know, a lot of points, probably pretty easy.
Yeah, and I want to mention too is just knowing, like, sometimes we might feel that our credit is not good, but actually finding out what it is that's kind of like the first step to say, okay, where are you at? But it's not always just about credit. I've had people that have their credit is not that good, but they have the income to back it up, and they may even have like be putting down a down payment or whatnot. So there's different things. It's a combination of things. So it's not always just credit, but credit is good. You want to have it at the highest, obviously. But if it's not, if it's somewhere in between, it's okay. You can still you can still play and be able to own a home, and even if you're in the mid scores.
That's a great point, because what Angel's talking about are called compensating factors. So if there's 10 different aspects to a loan application, if one's not good, if other ones are good, it could help you. You know, because if they're looking at two different offers and one has a lower credit score, but they have money in the bank and they're not asking for any credits from the seller, but this other person has a perfect credit score, but they don't have any money in the bank, so they're asking the seller, like, hey, give me like $5,000 in closing costs to help out, then they don't really care about the credit at that point, because they're like, well, this person has money, this person doesn't, so you then look stronger than that person.
Another question?
Oh.
What is the minimum down payment that you need? And is there any difference on the down payment that you need for an FHA and a conventional loan?
Yes, so FHA is 3.5%
Okay.
of the purchase price, so the price of the home. Conventional can go as low as 3% now. Yeah, so it used to be 5% minimum. Yeah, it used to be 5, and now they want to compete with the FHA loan, and they want to help first-time home buyers, so they came out with a 3% down. So you can do 3% with a conventional. There's more restrictions when it comes to putting less money down.
Okay.
But it is possible. There are, I should mention also that there are down payment assistance programs out there as well that will give you money for a down payment. Those are nice because you get technically money up front if you don't have money up front. But certain things to keep in mind is that a lot of those, later on when you go to sell, you have to pay that money back. So it just becomes like a silent kind of loan that you're not paying on, but you have to pay it back whenever you go sell your house. There are ones that do have stipulations where if you keep the loan for 3 years, you don't have to pay it back. So those are, that's why I mentioned it's important to keep all your kind of options open to know those certain things. Yeah, I always recommend if you have the money, put the money down. If you don't, then look at the down payment assistance programs. They're just a little bit more strict. You have to have a higher credit score usually, and your ratios have to be a little bit lower. You can't be maxed out. Like FHA lets you go 55%. Down payment assistance might only be 45. So there's different restrictions.
Okay.
Yeah, so identifying the different programs which he can show. There's even for those of us that are veterans, they have a veterans program that you put 0% down. But you also want to think about, there's something that's called an earnest money deposit when you're putting an offer in. It's usually in San Diego, it's like 1% to show it's earnest money, where you're putting it down as when you're putting in an offer. So that money there goes into the escrow account, and it could be going for closing costs, because closing costs is basically what the cost that it does to fund the loan, with escrow and title. There's other fees that come about. So that's one thing to consider too, is knowing, even if you get a low down payment program, you want to know that you want to have at least a little buffer there to be able to. We had to turn, just recently I had a listing where we had a bunch of different offers on the table, and one offer was a VA buyer, so we knew they weren't putting any money down, and their earnest money deposit, which is usually 1%, was less than 1%. They were trying to land the deal with only $1,000, and we turned it. It didn't look like a strong buyer because of that. So you want to be able to know, like, okay, what kind of program you're using first, and then also your earnest money, to be able to show that you do qualify for a deal. Because in that scenario, it was like, man, does this person even qualify? And we had to go with somebody else that had a stronger offer. So it's just little things like that.
Yeah, you do. You want to have some sort of money put away. So that's why it's important to plan out, little by little, like how much you can, set aside. Not everybody can accumulate 20%, but I mean, maybe you can accumulate several $1,000s just to have as a cushion. Even if you're going to use down payment assistance, we still want to have a cushion. Anything else?
Thank you.
I have a question, but this is for people who already own a home. I'm just wondering, would you recommend to make a bigger payment on your home to build up home equity on your home? Make a bigger payment on your house to build equity? Would you recommend that?
On your existing house or on your next
Yes,
purchase?
yes. Well, on your home.
Like making an extra payment.
So that's going to be determined on what your goals are, your short-term and long-term goals. If you want to just pay it off to that for just to not have a mortgage payment, obviously the answer would be yes. But for you just to like put it away there, there's other ways to go about it. So you definitely want to sit down with someone like Ricardo or myself to see what those, what your short-term and long-term goals are. Because the equity in San Diego, California, it moves a lot more quicker than what we do going to work for 40 hours a month. The equity moves a lot quicker than what we do with our own strength.
The reason I'm asking is we currently own a home, but we are planning of selling it in 4 years. So I keep telling my wife that we should try to build equity on the house, so we owe less in 4 years. And she goes, well, what for? We're gonna sell it anyway. And I don't know. To me, we should be doing that, but we're not.
Well, there's several ways to look at it too, because let's say you're gonna make a certain amount of payment. Let's say your payment's $1,200, and you want to pay $1,500, an extra $300 a month, right? Well, you could also take that $300 a month, put it in a savings account every month. It's almost the same thing, right? Or you can take that $300 and invest it in an investment that will gain money over the next 5 years or whenever you're thinking about selling. There's risk involved with that as well. Putting it back into your home is very low risk, because you're going to get that money back anyway, unless the market completely tanks and then you lost out on the money. So it's kind of depends on how much of a risk you want to take with your money and what you want to do with your money. So
and being able to have access to it too, so that what you're putting into your mortgage in 4 years from now, we don't know what the market's going to look like 4 years from now, and we don't know about life events, right? There's always things that happen that are not foreseen. So having something that's more liquid, I don't know, it all depends on, I'm not sure how your whole scenario, but really being able, do you want to have access to it if something were to happen? If not, if you're just banking on just selling the house, just know that it's going to be a process, and it usually takes like anywhere from 30 days to maybe 3 months for the whole process to go from start to finish.
Okay.
So you can't go wrong, basically. With doing that, it's if you're gonna put it in and you're gonna sell in 4 years, and you're gonna use all of that money for the next purchase. There's nothing wrong with it. I wouldn't necessarily say it's a bad thing, but I mean, does it help you? I don't see how it can actually help you. It's just it's kind of a personal preference. It'd be the same thing as you putting it into like a savings account. You know what I mean?
Actually, it's more risk involved because if the market crashes, then if the prices of the whole homes they go down, then all the equity that you try to build, then it's not there anymore because the price of the house went down. So you might as well put it in a savings account if you want it for the amount of money.
If you want
When I
Right.
recommend, yeah, you're right. When I recommend people make extra payment is when their goal is to pay off the house.
Yeah.
So if your goal is to pay off the house, then I actually have a spreadsheet where I can plug in how much extra. So let's say it's 300. I can put in, if you make an extra $300 a month, this is how many years you take off of your mortgage. For example, I was going to do a refinance for somebody recently, and I was looking at the numbers. They were going to save about $700 a month, which is a lot. And I told them just putting 500 of that back into your mortgage payment, you would have knocked off like 18 years off of their mortgage. You know, it's crazy.
Or going to buy monthly payment. If you spread your
Oh yeah. Mm-hmm.
going into your monthly bi-monthly payment, the exact same payment, you split it in two. You pay your half 2 weeks, the other half 2 weeks, and instead of 12-month payments, you basically cut in a month every year
Yep.
for the next 30 years, which would save you a lot of
For
money.
people who are trying to pay off their house. But if you know you're going to sell in 3-4 years, it really isn't a benefit to throw in that money in there. So, anything else?
One more? Or that's it? All right. Thank you
All
guys.
right. Well, thank you guys for being here. For those of you who are here and watching online, make sure you connect with us. These are different ways to connect. Website, Facebook, Instagram. Feel free to share this video for those of you who are watching online. Thank you so much. Stay tuned for Spanish one in a couple minutes.